On today's episode of the Cryptoverse. Yesterday's price crash could have been triggered by a slight misunderstanding over some data, and an Ethereum co-creator, Steven Nervayoff, weighs in on how 2018 could be Ethereum's big year, despite the fact that China are getting sour on miners. And today's episode is sponsored by the Dada Success Academy that I have partnered with to run 2 live cryptocurrency workshops in London this February. So check out those events if you want to meet me in person, and click the link in the video description below. Hi there guys, welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I'm your host, Chris Coney. So, a market crash potentially triggered by a slight misunderstanding. So let's first revisit the technical analysis that we did each day last week. If you remember, last week we were doing quite well here. And the last time we spoke about Bitcoin's price against the US dollar, we were right up here above 16,500, and the price had come down and tested 16,500, which was also the 23% Fibonacci retracement level. Then on Sunday the 7th, which is this candle I've got my mouse over right now. Actually, let me change this away from the crosshair because it gets in the way. So this is the candle I'm talking about on the 7th. We came down and support failed on that day. And then we actually broke the low of that day the following day, which was yesterday. So we ended up with this bearish engulfing pattern. And that means that all of this red completely engulfs the previous price movement, right? Even the bodies of the candles completely engulf the previous 2 price gains. And we went down to a low of 13,760 on Bitfinex. Now, as you know, my current short-term position started at 12,500 back here on the 22nd of December. But if I hadn't started there, then this crash would have been me buying the dip for sure. By the end of the day, yesterday, we did come back above the 38% Fibonacci level. So that's where you see this tail dangling below. The low was 13,760. However, we finished the day at 14,906. So a bit of a recovery there. Now, this may have been just a normal market movement, right? And just a failing of support. But there is a possibility that the market got spooked by something. If we head over to CoinMarketCap, when we click on the price of, say, Bitcoin, this is how CoinMarketCap determines the price that they display on the homepage. Now, my understanding is that they take an average of all of these price feeds that comes from all these different exchanges, right? And that's how they calculate the average to display on the homepage. But notice, sometimes they display the price with an asterisk next to it. So down here at number 14, exchange number 14, then we have an asterisk next to the price. So if you scroll right down to the bottom of the page, you'll see what the asterisk means. It says price excluded. So they're excluding that price from their calculation. Now, it's no surprise to me that the price they have chosen to exclude at position number 14 is Bitcoin trading against the South Korean won. It's several $1,000s higher than all the other prices. That's probably why they've done that. If they included that $20,000 price, actually I've highlighted the wrong one there. It's actually number 14 on BitThumb. It's BTC against the Korean won. And it's being displayed at $20,795. So if they did include this in the average calculation, that would artificially pull the average up, giving a distorted view, because that's the only exchange that has there's no consensus on that price. If you look at all the rest of them, they're all around 16,500, give or take a few percent, right? So apparently, yesterday, they decided to suddenly begin excluding this price from the calculation, which appeared on the homepage, and that made it look like the average price had suddenly dropped, which at that time it hadn't, right? That may have triggered some selling, which then fed on itself and caused some more panic selling, and eventually then fed on itself and became a bit of a price crash. Now, to be honest, this is to be expected in a market that has a high population of amateur traders and amateur investors. You know, with so many people relying on CoinMarketCap for their price feed data, it's kind of a central point, isn't it? Let's go back to the homepage here. If there's an error with this data and there's a discrepancy with it, it has far-reaching consequences. And that's why I much prefer to use Coinigy and get my price feeds directly from some of the largest exchanges with the largest volumes, like Bitfinex. So if you don't already have yourself a Coinigy account, I'd highly recommend you at least sign up for a 30-day trial, which you can do with the link in the video description. Just by the way, that is a referral link. So if you do decide to upgrade to a paid account after 30 days, then I will receive some commission for that, just so you know. But now moving on to this news story about, could 2018 be the year of Ethereum? Well, I was originally going to criticize this headline from CoinJournal, which says, Ethereum pioneer and early contributor says ETH could triple in 2018. I was originally going to criticize that because in the article itself, they don't then provide evidence that he actually said that. I actually did a browser search for the word triple, and it's not actually quoting him. They only mention it 3 or 4 times in the whole thing. Actually, one time in the headline, once in the article, and then once in a related story thing. So they don't actually insert the quotes of when he actually said that. So I was going to say, that's a little bit misleading. However, having watched just 40 seconds of this clip that I found on YouTube of him appearing on CNBC Fast Money, at the 40-second mark, he says, quote, "We could see a tripling of the price before the end of the year," close quote. So yes, he did say that, right? And this guy was on the founding team of Ethereum, which is no doubt why CNBC had them on their show, Fast Money. So why would Ethereum potentially triple this year? That's the real question, isn't it? Well, Steven says in the quick interview, it's like 5 minutes long. He says this in the context of, let's actually play the interview in the background. It's a good idea, isn't it? He says this in the context of what he sees as an exponential increase in the number of projects being built on Ethereum. The way I think about that is that demand for the Ethereum token, it primarily comes from applications that want to run on the Ethereum network, right? In order to use the Ethereum network's resources, you have to pay a fee, which you pay in Ether, right? Which is the native currency on the network. And the more transactions, then the more Ether will people have to buy in order to pay those fees. So again, the more apps that are built on Ethereum, the more everyone will need to keep a little bit of Ethereum in their wallets in order to run programs and do transactions, right? So that is the fundamental value of the Ethereum token. Yes, there's speculation on top of the price, right, to reach the current price. However, the floor on how far the Ethereum price can drop, well, that floor gets higher and higher every time a sustainable app is launched on the platform. So that's my long form interpretation of what Steven was saying there. And we know that there are dozens, if not hundreds of apps that are going to launch on Ethereum because most of them have done an ICO in 2017, right? And they're now all busy building their apps and building towards a full release, at which point they'll create a new load of demand for Ether to pay for transactions, right? Now, if just a fraction of those apps that did an ICO last year become large-scale apps, well, that means a significant spike in demand for Ether to actually run those apps. And of course, more people are going to launch ICOs on Ethereum. So again, that is one of the main uses for the Ethereum network as well. So that will be on top of all the apps as they launch. Now, one thing I categorically disagree with is when the host quotes Steven having said, Ethereum is like the Microsoft Windows of the blockchain. That's not true, on the basis that Ethereum is a virtual machine, not an operating system. Right, the Ethereum programming language, it doesn't provide the same level of abstraction as an operating system, meaning developers are still addressing the Ethereum virtual machine directly when they're writing apps and running them. Right? This is fundamentally different with something like EOS, because that is going to provide this layer of abstraction, which makes apps so much easier to develop. And that means a much wider range of developers will be attracted to EOS versus Ethereum. It's funny that this came up because I'm already on public record describing EOS as the Windows for the blockchain space for those specific technical reasons that I've just mentioned. So no doubt that's going to fire up the comments, but if you're going to object to what I've just said, you have to object to it on a technical level, not on an ideological level, or because you think that something I'm saying is anti-Ether. I'm not anti-Ether. I hold plenty of it. Actually, my Ether holdings are probably worth more than my EOS holdings right now, even though I expect that to change as EOS ramps up. However, I'm still holding a decent amount of Ether as well. So thanks very much for joining me today, guys. If you like this episode, go ahead and hit that like button. And if you're new around here, get subscribed. And if you would like access to my very best material, such as my structured online courses, then head over to my website, cryptoversity.com, click on courses, and you can either take any one of these online courses that I've made for your educational delight, or scroll down to the bottom and you can see the dates for my live workshops that are coming up in February. Also, make sure you subscribe to my channel on DTube, which is the decentralized blockchain-based version of YouTube, where you can earn cryptocurrency rewards for your best comments. If you make a good comment and contribute to the community, I will click upvote on your comment and you will earn some cryptocurrency for that contribution. But other than that, thanks very much for joining me today, guys. I'll be back tomorrow with another episode of the Cryptoverse. So until then, it's me, Chris Coney, saying bye for now.